In the equity quadrant, taking a look at the June S&P futures contract, the ES, the midday move that we had today, where the price action turned decidedly positive, basically midday. After some early mixed markets, we had the S&P 500 down a little bit off of the open and then rallied a little bit to positive. So much so that we were actually down 0.7%, just short of it really, 69 basis points at 39.13.5 in that June contract. That's off of the settlement yesterday of 39.40.5, but we were up as much as 1.45%, 39.97.75. So just 2.25 short of that 4,000 level. Since falling into bear market territory, which the ES did do intraday, down 20.18 on the low in that one intraday move a few days back, the S&P is now up 4.5% from that low print and up 2.05% for this week so far, after finishing today up about 0.8%, 39.73 was the approximate settlement price. And when you're looking at it from that perspective, that would be the first up week in 8 weeks if we finished positive. So the previous 7 have all been lower. The FOMC minutes were released today, and really no surprises came out of that particular release. 50 basis point rate hike was unanimously voted upon, and that's the largest increase in more than 20 years in any one meeting, which, by the way, backed by all the FOMC members, but most participants, not all, according to the minutes, most participants agree that further 0.5 point percentage increases would be appropriate, and they're all talking about the risk of inflation. But with some of the economic data we've gotten lately, it's part of the reason that we're seeing yields move down a little bit across the curve. They were slightly lower to a lot lower. By a lot, I mean about 3 or 4 basis points, so I guess that's not a lot. But yields were lower over the course of the day. And then we also had some home sales data yesterday, which again is showing the effects of that first rate hike as we report new home sales falling to the lowest level since the start of the pandemics, and mortgage applications are a little bit light as well. All of that points directly toward the Fed rate hikes maybe working a little bit in the short term, and that could actually give a little bit of a tailwind to this market if it thinks inflation is going to be brought under control.